Hey, me and my green ball buddy back here, we're going to do a little SPY analysis for you. First thing I want to do is make a case for support. This is the 9-month SPY chart. SPY is an ETF that reflects the S&P 500. So if you take a look, we've got really nice support right here at 105. And, when we pulled back to these levels, it's tended to bounce on several occasions, but it doesn't necessarily mean it's going to bounce this time. It's just something to keep an eye on. So we're right here at this 105. Another thing to mention here is we have very low RSI levels. RSI is the relative strength index, and anytime you get, it only is a case-by-case situation, but SPY seems to react when it drops down to the 30 level, which is this lower red line. You can see here, back in this area, we got a little bit of a bounce off of the 30 level. Right around this area, we got a little bit of a bounce off of the 30 area. Here, it reacted to 30 again, and right now we're right here at 30, so there's another case for potential support at this 105 level. Let's get all that out of the way and talk about some potential resistance. Now, I'm of the belief that we're in a bearish primary trend per Dow theory, which I've talked about on my blog several times, so check out tickertank.com if you're not familiar with it. But here I think we may have a potential downtrend resistance line created after this most recent push to the upside. So I'll be paying attention to this area in the event we do get a pop off of 105. I'll be looking to this downtrend resistance line as a potential area where SPY may pull back. Another thing I'm actually paying attention to is the fact that we have a case for a inverse head and shoulders. This being the left shoulder, this being the head, and this downside move right here potentially being the start of the right shoulder. Now I'm not going to react at all right now. I'm just going to keep an eye on it. We've got a resistance right here at 113, and another thing that makes this case somewhat strong right now, it's still very early, is diminishing volume. We've got high volume on our creation of the left shoulder, slightly lower volume on the creation of the head, and if this is in fact the creation of the right shoulder, even lower volume here, which is exactly what you want. You want this downtrending, diminishing volume on the creation of each progressive area of the pattern. So lastly, I'll need to see a push to the upside and a break through 113 resistance on a nice spike in volume. So if I get that, then I'll get bullish on SPY. Until then, deep down, I'm really bearish, but I'm staying nimble. You just gotta be nimble in this type of market environment. One last thing I want to touch is the fact that we do have our EMAs. We've got the 200-day and the 100-day converging right now, so they're coming together. Whether or not we're going to see a bullish crossover of the 200-day up through the 100, or a bearish crossover of the 100-day down through the 200, which is more likely in this case, being that the 100-day is trending lower. The purple line is this 100-day, and it's kind of trending lower down into the flattening 200-day. So we're likely going to see a bearish crossover here, which could cause some, could make a case for some continued downside pressure in SPY. So I'm overall pretty bearish at this point, but staying nimble due to the market environment. So if you have any questions, feel free to email me, nick@tickertank.com. Peace.